Survive the winter without us?
Inconceivable!
We're the hot spot on the radio dial. Today's hits and yesterday's memories. Family-friendly AM 590, WCAB.
A passing upper-level disturbance will leave us with lots of clouds during the morning today. We may turn partly sunny in spots in the afternoon, and during the morning we'll have a slender chance of a sprinkle or flurry in spots. Highs will reach about 46 to 52. Then tonight will be fair during the evening hours. Clouds will be increasing later tonight, and it'll be a little chilly with lows in the upper 20s to low 30s. Should see clouds mixed with some areas of sun on Sunday. We'll also warm a bit more tomorrow with highs around 52 to 57. I'm Mike Moss in the Weather Center.
That was the international Morse code signal, Save Our Ship, and that sound marks the beginning of my program, Gilbert Talks Taxes. As we all know, taxation with representation has not been such a good idea either. Good morning, everyone. Today, Jay is my engineer. Good morning. And I'd like to give a special Gilbert Talks Taxes congratulations to John and Esther, who just bought their first home in Forest City, and they have been up early cleaning and painting and getting it ready. And I wanted to tell them congratulations on getting a Schedule A deduction, and we'll be talking about that next year. I'd also like to welcome all our listeners on Northland Cable Channel 5. You can also watch us live stream right here in the Blue Room at www.wcab59.com. Just follow the prompts on the website and it'll take you right to it. Good morning. My name is Gilbert Carmona. I am the owner of Gilbert Carmona's Tax and Accounting Service, located at 113 Whitesides Road in Rutherfordton, just down the street, the same street that WCAB is on. We are live this morning. You can call in to this program with questions you may have. Answering the telephone is Christy Carmona, my wife. You can call in with questions if you've received letters from the IRS or if you've received letters from the state of North Carolina, South Carolina, any state that you may be having issues with. You can call and ask questions if you don't understand what the letter means. Some letters on the upper right-hand corner will have a code. That little code tells me a lot, tells me what that letter's about. To give that code to Christy, just give her a nutshell of what you think the problem is, and I'll try to answer it live on the air. If you have any other questions about taxes or comments, go ahead and call in. The number here at the station is 287-3356, or you can call my telephone number. Calls are being forwarded here, 828-289-9300. You can also go to my website, gilberttalkstaxes.com. Go to the Contact Us page, and you can send a question here. I have my laptop here, and Christy will bring me that question. We will be on the air for 30 minutes talking taxes, and if I can answer your questions in those 30 minutes, I will. If not, I will try to get back to you. Again, the number here, 287-3356. My number, 289-9300. Jay, where do I begin? It has been one exciting week. If you can tell, I'm just excited. We've been up late. We've already prepared over 125 tax returns. I think it's a record for my office. The IRS originally was going to open up tax season. They were going to open up the modern e-file platform. That's what they call their computer. When you fill out a tax return and everything's okay and you send it off and you do what they call e-file, it goes to a special platform they call the modern e-file platform. And they opened the platform on the 31st. Now, they were going to open it on the 24th, but because of some delays, most of them not with the IRS, most of them with government. We had the sequester, and then we had some other delays and some closing of government offices. So it pushed it back 1 week, but it opened on the 31st with very, very few problems, very, very few hitches. Acknowledgments came back very quickly, and on Thursday, they actually started releasing refunds. I've gotten many phone calls. At least 6 people contacted me. They've gotten their refunds, and more are on the way. We're on the way yesterday. Today, we don't know what's going to happen going forward, but all things considered, right now we can hope for the best. And I want to thank everybody that's given me feedback on the program. I've really enjoyed hearing what they have to say and the questions people have asked me. And some of the topics going forward I want to talk about, of course, are just, most of it relates to 1040, because that's the tax form that tends to affect all of us, or most of us at least, unless you have a business, and then we file an 1120 or the 1065, some of those forms. But some of the people were interested in some of my comments about the history of taxes. And I'm not going to get into that in today's show too much. I want to talk about new tax laws and some of the things going forward. But a lot of people are surprised to know that we have not always had an income tax in this country. It was started after the Civil War to help with reparations, and then it was brought back in around the Depression. And actually the first income tax returns were a one-page form. And there was actually a voluntary tax there for a while, and it's been in and out. But taxation as we know it today is a pretty modern new occurrence, and I would like to talk about that. I am an enrolled agent, as many of you know, and my profession, enrolled agents, has a wonderful history. We were actually created by Congress, the only professional created by Congress after the Civil War, to help Southern farmers who were damaged because of the Civil War to make claims on land, livestock, produce, houses that were lost during the war. And a lot of these farmers did not know how to make these claims, so Congress said, we have a problem. We need to help these farmers, so they created the profession of enrolled agent. We are enrolled by the Department of Treasury to represent taxpayers before the Internal Revenue Service. It's very unique. There's only 43,000 of us in the whole country. Testing is very strict. Ethics requirement is very high, and the continuing education is one of the highest of all professionals. So going forward, I'd like to talk about that some more. But what do we have going on today? Well, this week, the beginning of the week, we had a little bit of a scare from Washington. Some of the mainstream media picked up that refunds may not be coming out on time. And I just told you we had a release batch on Thursday, a release batch yesterday, and I don't know about, the impact of those yesterday, but the Thursday release was really good. But on the beginning of the week, on Monday and Tuesday, and I'm going to quote CNBC, they said the Obama administration warned on Monday that it could start defaulting on the government's obligations very soon. That's in quotes, very soon. After hitting a limit on the national debt later this month, Treasury Secretary Jack Lew said that the federal government should hit the ceiling by the end of February, which is really not very soon. But they said by the end of February, unless Washington raises the nation's limit on public borrowing. The federal government would then burn through its remaining cash more quickly than it would at other times of the year because the Treasury will be issuing tax refund checks. Lew said that without borrowing authority at some point very soon, it would not be possible to meet all the obligations of the federal government. Lew said in prepared remarks at the Bipartisan Policy Center event. Washington will start scraping up against the debt ceiling by Friday. That was supposed to be today. The day the suspension on the borrowing limit is scheduled to lift. The Treasury will then use accounting measures that will allow the government to keep adding to the debt. But Lew said this strategy would only get the administration to the end of the month. So the scramble was, how is this going to affect tax refunds? Because tax refunds right now at this time of the year is the biggest drain on the Treasury. This story's worth following, and let me tell you why. At first, I didn't even really understand it. Why are they even saying this? But it's worth following. Congress, the reason most people this time of the year get a tax refund is because there's tax credits. Earned income tax credit, education credit, child care credit, or they've just overpaid. The bottom line is, this is your money. This is not the Department of the Treasury's money. This is not the White House's money. This is not Washington's money. This is your money. And if you're listening to this program and you file a tax return and you work and they withhold and you get any kind of a refund because of these credits or because you overpaid, they're playing political football with your money. And listeners, that's just not right. And that's why this story is important. And then they're going to play the blame game on whose fault it is, when the bottom line is it's all of their faults. They're being fiscally irresponsible with our money and then acting like they're doing us a favor by giving us our own money back. This really concerns me. I'm sorry, Jay, I didn't mean to go there, but I had to. So I will be watching this story to see what happens, and I will be tracking refunds just overall and talking about that going forward. I'd like to talk about some new tax laws and some changes that are coming. Lawmakers, remember a couple of shows ago I talked about Congress comes up with the law. It's their only control. All Congress can do is generate and decide how revenue is dispersed. So when we talk about lawmakers, we're specifically talking about Congress here. Lawmakers decided to allow dozens of tax breaks to expire after 2013. So 12/31, and many of you, December 31st, 2013, a lot of these credits expired, and I hope your accountants and your CPAs were contacting you, especially if you're a business owner, and letting you know if any of these affected you. I know I was with my clients. We had several clients on the 31st out buying new cars to take the 100% deduction for this is for their businesses, business income, and some of these other things. And most of them likely won't be retroactively revived until late 2014, and we just don't know what's going to happen. Probably nothing will happen till after the election at this point. Nobody's going to risk it. Nobody's going to risk offending taxpayers and voters and taxpayers that vote, which they usually do. So they're all going to just lay low, and we're going to see no major changes come till after that. And hopefully some of these credits can be revived, and then they'll allow us to retroactively go back, but right now we don't know. They've eliminated R&D tax credits, which is research and development. And what's sad about that is research and development is where new technology comes from, new processes come from, and research and development has a direct impact on jobs. So a direct impact in an indirect way. So that's a sad credit to see that go. There's a deduction for state sales tax in lieu of income tax. That's your Schedule A. The situation, and that will affect people. And this is one that I personally bothers me because people in this county, and actually people in this whole region of the country, Western North Carolina, are affected by this one, is the exclusion of up to $2 million of forgiven debt on your primary home. This was a lifesaver for people who had their homes foreclosed on. They either had to walk away from a mortgage that was underwater, meaning you owed more on the house than the house was worth. You've heard of people say, I'm upside down on my home. They're upside down because in 2008, when home values just fell off the cliff, people had loans on a house. They owed $200,000 on a house that when they bought it, the house was worth $250,000. Now the house is worth $110,000. Ouch. So they're not going to pay on that mortgage, so they walked from the house, or they sold the house in a short sale to try to salvage whatever might have been left of their credit, and the bank agreed to it to take a lesser amount. They went through the process, which for some people was a very painful process, because the paperwork requirements were just incredible. But they, bottom line was they somehow lost their home. A lot of these people turned around and got, and sometimes years later, it didn't happen the first year, they would get a 1099-C. And a lot of you that were listening last week, I talked about 1099-Cs. It's one of those little time bombs that shows up in your mailbox. You could have had this mortgage problem, and typically we see it with mortgages, but we also see it with credit cards or cars, automobiles that you've had repossessed, or for whatever reason you couldn't meet the obligation and you lost the car, you'll get this 1099-C. This 1099-C, the income listed on there, actually it's not income, the forgiven debt, the cancellation of debt, that's what the C stands for. The cancellation of debt. Can you give me some water? The cancellation of debt is taxable. Now, in 2008, 2009, because we had so many of these, they enacted a provision which gave you an exclusion on that forgiveness of debt. If it was your primary home, you were excluded up to $2 million. Because I had people getting these 1099-Cs. A couple of weeks ago, I shared the story of one man who lost his home, moved here to Rutherford County because he had some family here and he had to move in with them. So he came to me to do his taxes and everything was fine. And in about June, he comes into my office white, and I mean white. He had just opened a letter from the IRS saying he owed them $98,000 because of a 1099-C he forgot to claim. He asked me, what's a 1099-C? I explained it to him. I called the real estate attorney that handled the short sale on the house. It had happened 3 years before. And the bank, by the time they got all the paperwork done and got everything finished and got around to issuing this 1099-C, 3 years had passed. The man gets this letter, this thing in the mail mid-year, doesn't know what it is, throws it out as most people do when they get something they don't know. Some letter saying something about this debt that you don't have to pay anymore. Well, great, we don't have to pay it anymore. Throw that in the trash. And then the IRS got a copy of that letter too. And the IRS didn't throw it in the trash. They decided to do something about it. So with penalties, interest, failure to file penalties, late filing penalty, and penalties for penalties, they told him he owed $98,000. Now, because of this exclusion, I was able to do the paperwork, send it in with the documentation. Took me all of about 15 minutes to get it off to the IRS. 6 weeks later, we get a letter back saying, never mind, you don't owe us anything. So this was really, really major, and a lot of people, this was a real lifesaver, and it helped them. And the problem with the 1099-C is that, let's say you get one, you couldn't afford, because 2008 you lost your job, as so many people here in Rutherford County did when a lot of the businesses closed. 2009, you couldn't pay your car, you couldn't pay your credit cards, so you call these people, I just don't have the money. So they may have negotiated, let's say you owed $1,000 on a credit card, and they say, look, can you pay us $500? You say, yeah, I can do that, and they'll tell you, can you pay $500? We'll waive the whole debt. So you say, great, I can do that. You send them the $500 or whatever, and they waive the debt. And you think that's it. So 2, maybe 3, in the case of one lady, 4 years later, because hers was in 2009, and 1099-Cs just showed up on her front doorstep last Friday. You get these 1099-Cs, and their income in that year. She didn't know about it, and if she hadn't thought, I better ask Gilbert about these, she would have just thrown them in the trash, and she would have gotten hit with a tax bill too. And if you get one, a lot of times you don't even know who the original debt was. Banks have merged, banks have closed, banks have merged into banks that have merged into other banks. I tried to chase one down, and it took me about an hour worth of phone calls, and I finally chased it to a bank that had bought 2 other banks and had bought this as part of the debt from another bank that the other bank had bought. So if you followed that, you probably are better than me, because it took me about 45 minutes to figure out what had happened, and I was able to resolve it. But the IRS doesn't care, and it's not their problem. They get a 1099-C, you owe that money. Healthcare reform. That's probably the top of the list of changes. Where do I even begin there? Everything I studied back in November changed. So I said, I'm not studying anymore. I spent 4 hours reading some manuals, and at the end of this manual, the man said the bottom line is, we don't know what's going to happen. I said, I just read 27 pages to find out that you, the expert, doesn't know what's going to happen. I've sat with board members of big companies who have said, we don't know what to do. We don't know how this is going to affect us. We think we know. We're going to go forward with what we're supposing, but the way the laws are changing, there's no telling what could happen in the next 6 months. But I want to say this about that. Bottom line right now is this, and we can all go forward on this premise. Individuals without insurance will owe a tax. Although the Obama administration delayed in 2012, the requirement that employers with 50 or more full-time workers provide employees with affordable health care coverage, that got delayed. There was a 2014 starting date, and they pushed that back to 2015. They did not delay the 2014 starting date for the individual mandate, which is what's going to affect all of us. So, the way it reads right now, and this is what I'm telling all my clients, and if you call me at 828-289-9300, this is what I'm going to tell you. Folks must have qualifying coverage for themselves and their dependents to avoid the tax. This includes health coverage provided by an employer that meets the minimum federal requirements, or coverage purchased through an exchange, or federal coverage such as Medicare, Medicaid, TRICARE, and veterans coverage. Now, individuals for whom coverage is too expensive, they are exempt from the tax. Employees whose share of premiums exceeds 8% of the household's AGI. AGI, by the way, and you hear this word a lot. AGI is adjusted gross income. Adjusted gross income is the number at the bottom of the front page of your 1040, your tax return, your 1040. Now, if you do a long form 1040, it will be at the bottom of that first page. If you do one of the short forms, the A or the EZ, it's kind of in there somewhere in the middle. But your AGI, 8% of the household's AGI, you won't be hit. That's ditto for people ineligible for employer coverage if the cost of the basic bronze level plan in the exchange, less any tax credits, exceeds 8% of the household AGI. So we got a lot of numbers happening here. But 8% of the household AGI. Also exempt, filers without coverage for a period of less than 3 months. So in a 12-month period, if for whatever reason you don't have insurance for a 3-month period, you're exempt. What I don't, and I'm waiting to see about that, is that a 3-month contiguous period? Is that 3 1-month periods? There'll probably be some rules coming on that. And people who can show that a hardship forced them to go without coverage, well, if you ask me, taxation is a hardship, but I don't think they're going to accept that, including folks whose insurance was canceled and who can't buy an affordable policy. Now, let's talk about the penalties, because that's all that I just said is let's get to the penalties, because that's what everybody wants to know when they call me. What's it going to cost me? It's going to be the higher of two amounts. There's a basic penalty or there's an income-based levy. The basic penalty, $95 a person. That's $47.50 for each family member who's under the age of 18, and the maximum that one family filing one Form 1040 is going to pay is $285. Or it's going to be the income-based penalty, which is 1% of the excess of the taxpayer's household AGI over the minimum level of AGI needed to trigger filing a return. So it's 1% of the excess AGI. So for single filers, that number is $10,150. For couples, that number is $20,300, and you can add another $3,950 for each dependent. The tax is lowered proportionately for any months that the taxpayer is not covered, which gets back to that question I just said. Is the 3 month going to be 3 1-month periods, or is it 3 months lumped together? We don't know yet. Now, the levies will be higher in 2015 and 2016, and they keep saying that they're going to be much higher, and I don't know if it's just a scare tactic. I've heard some numbers, but I don't know. They keep changing, so I don't know. But in no case can the tax exceed the cost of bronze-level exchange plans for taxpayer and family members. Now, the strange part of this whole law, and there's a lot more, I really am giving you just the nutshell. The strange part of this whole law, the lead agency, which every government project, program, whatever, has a lead agency. The lead agency is not the IRS. The lead agency is the U.S. Department of Health and Human Services. The IRS is the bill collector. Okay? The bill collector. That's all they are. And it's fine for them to be the bill collector, but the IRS has really been hamstringed on how they can collect this tax. They cannot use liens or levies. All the IRS can do is offset a tax refund. You understand what that means? Let's say I am getting a refund of $1,000 and I owe the IRS $500 because of this health care issue. They can take that $500. But let's say I owe the IRS $1,000 and I owe them an extra $500 because of the health care issue, health care coverage issue. They cannot come after me for that extra $500. Nor can they charge interest on an unpaid balance that involves the health care coverage. So as Dad used to say, they've just taken the teeth out of the dog. Because the whole reason we all comply with the IRS is because they can take my house away. They can take my car away. They can levy me. They can garnish me. They can seize my assets. And they can, and they will, and they do. Just ask any celebrity. The headlines are full of them. But they cannot do any of that for the debt involving health care. So for a lot of people, the simple solution is going to be skew your tax planning so that you owe a little bit. Just enough so you don't have a failure to estimate penalty, but not enough for them to be able to get into you. I'd like to thank everybody for listening to me on this beautiful February 8th day. Jay, thank you so much. Thank you for listening. You've been listening to me on Northland Cable Channel 5, www.WCAB59.com, where we were live streaming. Good morning. Thank you for listening, because taxation with representation hasn't been so good either.
Listening to the radio, driving in your car. Radio gets results. Radio is there no matter where you are. Radio gets results. When you need to get your message through, people really do listen to you. Coming through loud and clear, no matter what you're telling, no matter what you're selling, everyone will hear. Radio gets results. Radio gets results. Radio gets results. Radio gets.
Serving the foothills of the Carolinas, this is WCAB Rutherfordton.
Serving the foothills